Dollar won hits 1,500 as Korea faces three highs. As fears grow about a prolonged conflict in the Middle East, the Korean economy faces mounting pressure from surging oil prices, a weakening currency, and rising inflation. In the Seoul foreign exchange market, the dollar-won exchange rate briefly surpassed 1,500 on Monday. This marked the first time that it broke 1,500 in daytime trading since March 2009. The collapse of the psychological threshold of $1 equals 1,500 won has heightened anxiety across financial market. The exchange rate has surpassed that level only during periods of major economic turmoil, such as the 1997 Asian financial crisis and the 2008 global financial crisis. Korea now finds itself confronting what economists describe as three highs: high oil prices, a high exchange rate, and high inflation. Oil prices rising above $100 per barrel pose a serious problem for Korea, which ranks seventh globally in crude oil consumption. The country's energy supply structure added to the risk. About 70% of Korea's crude oil imports come from the Middle East, and more than 90% of those shipments pass through the Strait of Hormuz, a key maritime route now threatened by Iran's blockade. At the same time, fears of stagflation, rising prices combined with slowing growth are intensifying. Higher oil prices and a weaker currency could raise import costs, increase corporate expenses, and reduce households' purchasing power. If consumption weakens as a result, the economy could fall into a cycle of low growth and persistent inflation. For an economy already struggling with structural weaknesses, that combination would be especially difficult to resolve.